Before we begin with today's market analysis, I would like to mention our new channel membership options. This is a special introductory offer which will open access to members-only trading strategy videos that are based on high-value, high-conviction investment strategies and are characterized by superior risk-to-reward metrics that target massive, market-beating returns over time. Please note, this is a limited time offering of just $9.99 per month, but members that sign up during this introductory period will be able to lock in this new low rate for the entire duration of the membership. Again, this early sign-up period will allow you to lock in this low introductory membership rate for life, and these new low introductory rates will only be made available for a limited time. Monthly membership prices will be going up after this short introductory period ends. With these comprehensive, members-only trading strategies, I only choose high-quality, high-conviction stocks that are easily accessible, with relatively low share price values that are designed for easy trade positioning, and combined long-term trading gains are expected to far outperform the monthly membership rate of just $9.99 per month. Join now to lock in your low introductory rate and start trading stocks with the pros. Now back to the video. Here we have the current market analysis for FARADAY Future Intelligent Electric Incorporated, stock ticker FFIE. So we can see here that the stock is attempting to consolidate at some upper levels relative to its near-term lows. So what we will be doing in this video will be to outline some potential trading zones and price levels, which can be used to establish investment strategies here going forward. This will be important because, as we know, the stock has seen some very significant declines over the long term, and there are many people that are trading the stock that are currently underwater. So we do need to start to identify strategies that will allow people to sort of recover those gains and to sort of improve their profit position for these investments. So in particular, what I would want to start by looking at here would be the fact that we have now sort of established a support zone right near the 35-cent mark. We can roughly call this just below 35 cents, roughly 34.3 cents. And this will be a very critical price level to watch going forward because, as we can see here, there has been a very substantial recovery over the short term. And this does suggest that a reversal could be starting to build here. So, the reason that this level is so important is because we really need to look at the prior price rally that was seen for this stock. These rallies are going to become more and more important as we move forward trading the stock, because as we know, these longer term declines have been quite substantial. We can just sort of pull out for a minute and see how far the stock has fallen in a very short period of time. We were trading close to 55 cents here not so long ago. This would have been Monday, June 15. So the stock really has taken quite a dive here. So we do need to outline some potential trading strategies here that will allow us to get that money back and to see substantial trading gains here going forward. So in particular, the reason that I want to look at this specific price zone here is because it's very important in terms of what occurred during this prior stock rally. We do need to analyze these rallies here because this is going to be the type of activity that we need to see going forward. So if we're looking at this price rally here, what we can see here is that the stock recently found support right at the 61.8% Fibonacci retracement of this move. This is a very important development here because the 618 retracement is the most important Fibonacci retracement level. If we were to see a break below here as this happened, that would have been a very bearish signal, and it probably would have suggested that new lows would be coming. However, this did not happen. As we can see here, the stock did manage to find support in this area and rally higher. Not only did it rally higher, but it also moved above its exponential moving average cluster. That would be these colorful lines here. We can see the yellow line is the 20-period exponential moving average. The orange line is the 50-period EMA. Purple line is 100-period EMA, and the blue line is the 200-period EMA. So as this price bounce here did occur, it was strong enough to force share prices through all of these exponential moving averages. This is significant because it does suggest that positive momentum is starting to build, even though there are other indicators which suggests that that might not be the case. So in particular, what we would want to look at here would be the reading in the relative strength index. That would be this purple line at the bottom of the chart here. And as we can see, for the most part, the trend has been lower. It is moving in the negative direction, although it's not substantially so. We're not seeing a huge amount of negative momentum here. And this does suggest that it is sort of a weak downside force here that has been sending prices lower over time. And that is a positive for people that are holding the stock, because it suggests that it can be broken quite easily here going forward. In particular, the price action that would need to develop here would really force this relative strength index reading to move above its recent exponential moving average. So here we have this purple line here, which is the relative strength index, and then we have this yellow line here, which is the moving average of the relative strength index. So if we were to see this purple line cross above the yellow line, that would be a bullish indicator, and it would suggest that prices are ready to start reversing in the upside direction. So currently, we have to watch this level to the downside. It's very important to watch roughly 34.3 cents. This is going to be important going forward. If we see a break below here, that can start to change the outlook, and then we would need to revise this analysis. However, the way things currently stand, the next upside target does come in roughly at 37.2 cents, and then this would be the next level of support that would be expected. The reason that we say this is because this area does mark a sort of a double top condition here. We can sort of draw this out, which really means that this area has been tested on two separate occasions, and prices found resistance on both of those occasions. So if we're able to continue bouncing based on this 618 retracement and then move through this 37.2 cent mark, this really would set the stock on a course for a fairly major reversal on the top side. The reason that we would say that is because the stock has fallen so sharply over the longer term. I mean, if we were to pull out to the longer term time frames, this would be the daily chart or the weekly chart or something like that. We would see some fairly significant price moves here to the downside. But the reality is that can only happen for so long. That can't happen forever. We need to start to see some sort of stabilization here at some point, and markets do need to move back toward their longer term moving averages. Currently, we're trading well below these longer term moving averages, and this would suggest that we do need to see a bit of a reversion to the mean here. And from the longer term perspective, this is a short term trading chart that we're looking at right now. But if we're looking at a weekly chart, for example, those moving averages have deviated far away from current price action. So if we do just see that distance start to close, it would suggest that a major reversal here could be in place, given the fact that the stock has moved so far to the downside. So currently, these are the major price levels to watch, and this is the current outlook for FARADAY Future Intelligent Electric Incorporated, stock ticker FFIE.